Hi, everyone, and welcome back to the AI Interconnect podcast. I'm your host, Lauren. The show is a platform where founders and CEO shares their real journey, their challenges, their vision while building an AI, fintech, or an emerging technologies. At AI Interconnect, the goal is simple. Meaningful conversation with builders shaping the future across global tech ecosystem. Today, I'm joined by George Kailas, CEO at Prospero.ai, an AI platform focused on helping investors make smarter, data-driven decisions through predictive insights. George, thank you for being here. Very, very happy to have you on the show.
Thanks for having me on. I'm really, really happy to be here.
Wonderful. I Let's start with your background so listeners understand the path that led you here. You have clearly positioned yourself at the intersection of AI, finance, and decision intelligence, which is a demanding space to operate in. George, how did your background lead you to build and lead Prospero?
I think it's a classic example of what people talk about when they say, being mission driven. I wasn't, when I was younger, I had ambitions to, I would say for a long time, make the financial world more fair. I had experiences early in my career. I worked at my first hedge fund when I was 17. I actually taught myself accounting to get that job. And even when I had these early experiences where I was trying to learn ways to create more fair structures, where I was at small hedge funds and I felt very disadvantaged versus the larger guys. So at that time, I wasn't saying, "Hey, I'm going to start an AI company," but AI emerged as a solution that I saw could be a great equalizer. And when I got into it, for the first time, I say more ambitions to do so 15 years ago, we got to be on the ground floor of, some of our own early reinforcement learning applications. Before that was a thing, we experimented with evolving neural nets. And those were kind of paths we went down relatively early because we were trying to solve that problem, making things more balanced, more equal, leveling the playing field. So it's one of those things where I think, I always advise founders to be mission driven because if you're mission driven, you're problem solving, as opposed to, I think, what a lot of people do is they'll go more top down and say, I want to have an AI company. And I think it's very hard to do it that way if you're not solving a problem and solving a problem that you're passionate about.
Yeah, I love it. Start very cool. Okay, then what early experience shaped your view on AI in investing?
I had some really interesting experiences, I would say more on early in my AI career, where I just learned, I would say, the obstacles of, building for institutions. A lot of them, I had some bad experiences, don't want to get too into it, call anyone out, but where people seem more interested in brain draining, pretending to give deals to you, and that, I would say taught me my most important lesson, which is rely on yourself. Don't count on other people. Don't count on funding anything. You've got to be prepared as an entrepreneur to do it yourself. And that's an early valuable lesson that I learned. But I would say more on like the applied side. We had a very big, presentation with one of the largest asset managers in Asia where they wanted to see early versions of our stock picking program that we eventually tailored towards retail investors. And in that time, I was singing the praises of parallels that I see right now where we were going so pure, like complex equation, nonlinear equations, automated feature engineering, automated hyperparameter tuning, interesting ways to explore feature sets in intelligent but complete way, make sure you're exploring the problem. And at that time, even though I was a trained value investor, I moved away from those routes. And I actually handed in a list of stock tickers that I didn't even look up when I had this big presentation. And when I didn't realize at that time until we saw that we were wrong, was that our models were actually not predicting price. They were predicting volatility, right? Because generally the stock market goes up. And so a lot of the times models were just picking the most volatile stocks because that's how you got the most returns. But that's actually a really good lesson for anyone who invests, anyone who's looking for models, anyone who's like using GPT to invest right now, for example, or Claude is doing very well. And there's a really good example of someone telling Claude that basically it would get turned off if it didn't turn, I think like, something like $50, $10,000. I forget the exact numbers. And that's actually an example of the lesson I'm trying to teach now, which is that, imagine if you told a trader at a big bank that they're going to be fired if they don't 10x the returns in a month. They're going to take a lot of risks. And you might not see those risks until it's wrong, until the market turns fast, where you end up, you might make a bunch of money, but you could lose it all very quickly and go back down to before where you started if these models are taking a lot of risks. So that's really what I learned, is that especially like these smart models that are exploring things in complete ways
Unknown
and kind of
caller.
doing nonlinear solves of the space, they're going to lean towards risk. They're going to lean towards volatility. And that is a lesson I learned early that I think a lot of people, I probably learned that like 8 years ago, that I think a lot of people still haven't learned. And that's why we actually moved at Prospero more towards signal based foundational models and linear based foundational models that we will, what we say, scale up intelligently, let the models integrate new data in kind of a scientific method kind of way, play around with the weights of these linear formulas. But the other thing that we do that I think is, an important lesson from that, all of our signals have to explain an idea, because it's very hard to debug, like, is something predicting price well? You don't know until it's wrong. But if you say, like, net option sentiment is our most powerful and popular signal on Prospero, and what we can do is we can say, is this explaining the options markets well? Do we think, as we look at these linear formulas, as we look at the way that the AI is like weighting these in a given day, does it make sense? And a really good example of that tangibly is a lot of what we look at is options pricing, and in the short-term options markets for net option sentiment. And it's very hard to, in terms of stocks, a lot of institutions will short a stock that they intend to buy. So you're not necessarily getting good signaling there. If you're looking at pricing in the options markets, it's very expensive to lie in the short-term options market. So if you look at the pricing, because just to explain that, because these options have short expirations, and so every day you hold them, they decline in value, especially the shorter term ones. So you really don't want to lie about that, because it's going to cost you a lot of money to, tell that lie. And so we'll look at pricing, we'll look at open interest, which is just like raw dollars betting on, like, calls, bets the stock is going to go up, where the stock is trading, or puts, bets that the stock are going to go down. So like raw dollars, things like that. But about a couple of years ago, we started integrating volumes more, the number of trades. And a good example of that is, in any given day for net option sentiment, volume will make up about 5% of that, of that total 0 to 100 scale. And what we let it do and experiment and test, and basically the way that we do that, I mentioned, kind of the scientific method. An algorithm has to understand and predict its own accuracy and its improvement to the signal, and then it kind of can earn its way into more weight if it shows that it understands its own predictive problem well. Now, on big options expiration dates, there tends to be more volume. And we've actually noticed over time, reliably, we've seen on options expiration dates, the model weighing as much as, 15, 20%. Where on a normal day it's 5, and that increases the accuracy. I'm kind of wrapping that whole story, right? Because that's what I mean when you say, does it explain something well, right? To me, we can make sense of why it's using volumes more. There are more volumes on that day. It makes sense that it's more predictive. It's very hard to do that if you're using pure nonlinear models, big data sets. And the problem with that is, a lot of the times you don't really even understand what variables it's using, how it's weighing those variables. They're inherently opaque models. So I think that all stems from that lesson. I think I try to take these things to heart, where I was I didn't even know anything about what the model was outputting, let alone how the models, the nonlinear equations were working. So I kind of swung in the other way, and that's how the system works very well. And it works very well for retail investors, because a lot of times, if they're looking at other products and they're trying to figure out how it works, they can't see, especially if they're neural network based. But I can give very like rational explanations like that of why our signals are calculated the way they are, why they work. And there's not enough of that in AI, quite frankly.
Okay, I really love it. Okay, perfect. You mentioned it, but from an external perspective, Prospero sits in a very strategic position between AI analytics and investment intelligence. When you explain Prospero to someone outside fintech, how do you describe what you do, and will you help? Is it B2C or B2B?
It's definitely B2C. We don't have any like, an important part of, our DNA. I would say there's a number of things, you're hearing some of them, but looking at things like the Robin Hood problem. Like I was involved in AMC and I saw that whole thing unfold. I saw Robin Hood turn off the buy button. And for Prospero, the most important thing to us is actually earning trust. Even, a lot of our products are free. So even more than money. So for us, we don't want those associations. Like we don't want, if we were feeding trades to a platform, we don't want people thinking maybe they were recommending this stock because it's a trade flow. And that's what happens in other platforms, quite frankly. Like when you're using Robinhood, you don't know if it's like a suggested stock for you because it's similar enough to what you trade, or it's something that they think the pricing is good, like that they want you to buy because it's advantageous for them. So we in our base have gotten rid of those conflicts of interest. And I think that's really important because we have a vision for the future why we're building this way. We want to create a better system that pairs retail investors and us. And I'll tell you why. Like right now, hedge funds buy things like real-time credit card swipes, camera data, satellite images, web traffic data. They know everything about you, even as you swipe your credit card. And they're using that data to trade against you. We want to ask actually better questions. Actually, like those are all point of sale. We want to be able to ask people questions like, how much do you expect to spend at Apple or Target in the next quarter, next year? What the next phone you're going to buy, and all the way up to questions like, what's your temperature? So we could model, say, a pandemic in real time and do what the U.S. senators were doing when they were looking at hospital data, reassuring the public, shorting the market. But all that stuff, instead of that private arbitrage that the current system does, we believe that making that more of a public utility will incentivize more data sharing and like accelerate the shared advantage that us and retail investors have. So yes, we think a lot of people are underestimating retail investors, underestimating the value of the alignment and trust with retail investors. And we think that's going to pay off for everyone long term, us and retail investors.
Of course, awful. Love it. Okay, building an AI product in the financial space come with strong expectation around accuracy, trust, and performance. Right now, George, what feels like the hardest part of scaling Prospero?
So I think there's a balance, and I think you touched on it, right? Where it's like there's a push and pull between marketing and user experience. And I think everybody experiences this, right? And I think it's very important not to overpromise, right? What we tell people, our marketing is, it says, pick stocks like a pro, which is like a nice balance because we want to let people know that they have to have agency in it, but they're going to get support. I mean, we worked a long time on that because, a lot of people will approach me about new AI asset managers, things like that. And they'll be like, what do you think? And I'll say, honestly, there's no real information on this website, but I want you to think about this idea. I want you to think about this idea that this platform is telling you that it can, make money in the market as an asset manager when it's just like a lot of these companies haven't even raised, say, $100 million, and Bridgewater could lose $100 million in a day, and that could just be a regular Tuesday for them. But like, you make sense of it yourself. Does it make sense that like this startup, you think they can like outmanage these big hedge funds? That doesn't make sense to me. But what I always emphasize is like you have to do what makes sense to you. And that's why, when I talk to people, I really emphasize, and I think this is the important thing, is that Prospero helps people improve. It'll help you learn better. And the more actively you incorporate it in your decision making, when you look at it, when you make your regular decisions, things like net option sentiment, or even like QQQ or SPY net option sentiment, those have been quite predictive of market flips. You get this into your wiring and you'll become better. And that's the promise that Prospero makes. And I think that's both a realistic promise and an important one because I've said to many people, I was like, use it for 6 months. Tell me if you haven't gotten better. I've never had anyone come back to me and say that it hasn't made them better. So I think that that's an important part. And the other thing that I think is very important beyond just that idea of like improvement and owning your educational journey. Is that like some of my best users, I do like one-on-one sessions, and I always tell people, if you watch this, you can email me at George at Prospero.ai, and I'll just advise you on your investing journey, even if it's not using our products. Because some of our best users, I've had a conversation with them, and I'll just like stop right in the middle and say, look, I feel obligated to tell you that I don't think you should be picking stocks. I don't think you're ready to put the time into watching the market or committing to your education. And I have to recommend that you are in an ETF. Here's a couple that I would recommend based on your risk reward profile. And, sometimes people will take that in and I never hear from them again. But sometimes, some weeks will pass and they'll be like, you know what? I think you're right. I don't think I was like, I do want to learn. And like that's I think what you need to make people agents in their own learning journey, and they have to commit to it. And that's the only way they'll get better, and that's the only way to improve. Because like I have an interesting story to like actually put a cap on this like product realism thing. Generally, we will build what people ask us to build, right? We want tools that people will use, especially if it's like a majority. The one thing that I didn't build or we didn't build was price targets. And a lot of people asked for them. And I actually went back, this was years ago. I actually went back to them and I said, here, actually, you should just take the survey. And pretty much the only question that mattered, we peppered in some other ones. The only one that mattered was, what would you expect the success rate of a buy rating to be? And many people said, the majority said 60%. More people said 70% accuracy than 50. And for people that don't know much about the markets, like there's a saying on Wall Street, you're right 51% of the time, and you could start a hedge fund. So basically, all these people wanted a product that couldn't possibly exist. And I think that is, the tough thing about retail investors. And like everybody thinks it's easier. There's a massive over-reporting of successes and under-reporting of failures that makes a lot of people think it's a lot easier than it is. But we try to like strike a really important balance there, which is it's like Prospero is powerful software that will help you get better. It's not perfect. It's going to be wrong. This is a challenging problem, but you and this software will get better. And I think that that's partially because we have a lot of confidence in the software, and that's partially because I believe setting people on that journey where they take agency in their own learning and their own improvement, even if they didn't use Prospero, they would get better. But Prospero will accelerate their education.
I love it. Beautiful. Is the bigger challenge a product development, market education, or a user acquisition?
Yeah, that problem stems at user acquisition, right? Where it's like, because you're up against all these other people are being bombarded with these ads, like, we've beaten the market 700%, we'll do all the work for you, and like all that stuff. So people, especially people that don't understand the realism of that, we're kind of competing with that. And, for a lot of people, right, even pick stocks like a pro, people are like looking at that slogan and being like, that sounds like a lot of work. Right. So it's like you have to strike the balance between cutting through that noise of all of these places like over promising. And in bull markets, they're also delivering. So you kind of just like, it's a patience game. We've been around for 4 years now, and we just have to keep like plodding along, like having our success stories, like marketing through channels that kind of like double down on good experiences that we've already had. Like, we use X a lot because a lot of our like we've worked with influencers who had good success there. And like that's a good way to do that. But yeah, it's challenging to not only acquire users, but acquire the right users. And we've worked on our marketing for that, because we've had marketing in the past as we've experimented with things where we have made it seem too easy. And then even if those people are coming into the funnel, they're not coming in with the right expectations and they're not having a good experience. So like I'd say to in this industry, like sector, I really think you have to commit to slow and steady growth. I look at these, I mean, if you want to be parabolic like we do, right? I think a good example is like you look at like Wealthfront and Betterment. They grew very fast, but ultimately they didn't have a great product. They were overcharging for modern portfolio theory. And they grew very fast and they kind of like plateaued because enough people figured out the same thing that I said, where it's like, at the end of the day, why would you put your money into Wealth Product Betterment when you could put your money in Vanguard? That's very optimized for, tax, low fees, better, longer return profile than, a lot of these like modern robo advisors. So, it does work itself out in the end. And I do think the only way to reliably build a company that's going to be actually industry changing is the way that we're doing it.
Awesome. Then you are observing both the AI evolution and investor behavior at the same time, which give you a very unique market perspective. And from your vantage point in the AI-driven investing, what what shift matters most right now, but it's still underappreciated?
I think it's kind of the same advice I've been given, but also like repackaged a bit, I would say. That, I have like 7 most important investing lessons that I worked on like a couple years ago. And one of them is, like know what you're up against, know what you can beat on. And I think, you know, AI has given people better information, right? There's a lot more research in your hands, but the same rules apply, right? You have to say like, okay, if I can put this in Chat GPT or, Perplexity or whatever, everyone else can too. So even if this is really, really good intelligence, you still have to ask yourself the same questions like, do I have some advantage over other people in this? And if you're just dealing with a generative AI, like as smart as it could seem and as right it could be for a time, like, you have to be honest with yourself that that's something that anyone can do, right? You where I always gave advice, and it's even more true, right, is you have to layer in a little value investing, right? Do you like do you work in, you know, are you an Uber driver, right? Do you know something about Uber and Lyft? They have this, like, are you a doctor? Might you know something about, how to validate biotech recommendations where you can layer in your expertise there? That's where you could say, like, okay, with the same information as everybody else, I might be able to draw different, better conclusions. And if you layer in that, that's very important. And then the other thing is, confluence. And that's why, we think Prospero is such an important tool because you can take something like generative AI answers and you could see if the Prospero signals also like it. Right there, you're doing a lot better than anyone that isn't using Prospero, which is a much smaller number. We have about 20,000 monthly actives, right? So at that point, you're then starting to talk about, being in a smaller group where you might see something that other people don't, and then there's, perhaps a third layer if you know how to read, charts, even though the generative AI things are really good at that, like there can be things in real time that you know how to do. And there's, other products where you might be able to add like a third layer of confluence. Like I always suggest, like actually looking at some value investing things on top of that where you actually say like, we did this on a live stream recently, but it's amazing, how many people don't look at this stuff, which is like even something like Nvidia versus AMD. And I hadn't refreshed the analysis in a little bit, but I even did this very simple analysis because a lot of people were asking about AMD, where AMD was actually closer to its all-time high than Nvidia. And that doesn't make any sense, right? Nvidia is a much better purchase. A lot of the story with AMD and why it started to go up and people started to talk about it was it was growing not as fast as Nvidia, but it was trading way further away from its all-time high and at a better value metric than Nvidia. But that's now moved, and people are still talking about AMD, and that's kind of dumb. I even see like some AI, like some of the AI outputs talking about AMD because there's some momentum behind it. It is close to its all-time high, and one of the most predictive signals actually is of if something will go up the next year is if it went up this past year, right? That's kind of a simple technical analysis. But like I'm saying, if you learn to layer in other logical analytical frameworks, other tools, then you can actually say to yourself, maybe I know something that other people don't. But most people have a very hard time being honest with themselves about that.
Yeah, definitely. Things, okay, then timing and strategy focus seems critical in a fast-moving AI and fintech environment, obviously. Looking ahead, 12 to 18 months? What does success realistically look like for Prospera?
So we have some big product launches that we have our alerts launch that's going very well. That's actually where instead of like the 10 signals, we actually give our like best idea every day. We send that out as an alert. That's a little more clarity. Then we have, some new signals coming online. Our momentum score, which we use in our trading letter a bit, and we actually are making these things called smart price targets. So we are getting to the price target thing, but we did a lot of development work, and it's also a premium feature, which is how we get around that because we think generally if someone's willing to pay for something, they understand the market a little more. But then, we have a goal of getting into asset management. And, 18 months, maybe 24 months is like a better timeline um for that. But, we have a lot of ambitions there. And I kind of gave you the story of why it didn't make sense. But that's why we're building this way. Because when we want to get into asset management, it's when we will have a critical mass of user generated data, like also known as alternative data on Wall Street. So we can put our best foot forward in terms of saying, look, we actually have a reason that our asset management products can beat the ones out there. And then also again, that trust factor, like I come back to those people asking me about how to evaluate a product, right? And I'm like, I don't know. But by the time we launch these products, we'll have people that have been using our signals see them work on their own for 5, 6 years. So that's a different layer of trust in terms of like believing that as well. So yeah, we'd really like to be able to make waves in asset management, but we're doing it, as I said, in my opinion, the right way. And one of the things that resonated with we had a crowdfund recently with our crowdfund was that you know, Betterment Wealthfront, they paid about $1,000 a user for their early users. We actually get people into our funnel at about $1 a user, right? And obviously, a lot of them aren't paid, but as we move into asset management, we teach people, we get people in that funnel. Like, not only do we think we build that trust to build a really good product, right? We can also stand there and say, when you pay us money, it's going to make the product better, not to get new customers, which is not something that a lot of, fintechs can say. I mean, Robinhood pays more than $100 a user, right? And they're even making that money, a lot of the money off institutions. So we think that's a very important part too, where we want to get to a phase where we A have earned trust, B can explain why we can get people an edge on an ongoing basis, and C, honestly tell people that when they pay us, it's going to make the product better.
Okay. Yeah, definitely. If you had unlimited resources, what will you accelerate first?
I mean, we would put like we want to launch a generative AI product, but the guardrails are really tough. We want to make sure it's not giving people risky information. And that's been challenging, right? That's a big product project that we just dipped our toe into a little bit. But we'd love to launch something that just let people like, explore the Prospero signals, like give me the highest accelerated computing rated stocks and net option sentiment upside, that kind of thing. But it's been so hard to make sure it's not, giving people risky information. A lot of it is like we need it to ask people information and the right kind of information so we can be sure it's got to be a bit of a give and take to be able to do that. So we'd want to do that. Like we have a number of technologies that we really want to roll out that are just kind of in the backlog that we focus on the products that we have. But we do those immediately. And then I think we would spend more on marketing. We would, want to get the word out a lot more. And the way we would do it is we would probably scale up our video production, social media. We would have a lot more people in the network using the product, making videos of it, posting about it. Like we think that that's the right way to do it. Costs a lot of money to have that kind of like high production stuff, work with a lot more influencers. But like I said, getting people in the right way is how we do it. So we do all of those things instantaneously with the limited resources. I'd be very excited to do that, but I don't think we're doing all those things anytime soon, unfortunately.
Yeah, little by little. I love this. Okay, then many funders listening are building AI platform in competitive and fast-changing markets. Based on your experience, George, what should funders building AI products start doing and stop doing?
So I know Jeff Bezos isn't always the most popular guy, but I always think of something that he said to his early employees, and I guess he was kind of annoying about this, and I think it's kind of hilarious. Apparently, in a lot of early Amazon meetings, he would make his employees talk to the fake customer at the table, and he'd say like, "How do you think the customer feels about that?" And I think that that's so important to, that's a funny way of doing it, but I think continuing to ask yourself, like, are you putting the customer first? Because I think that's getting more and more important, especially as these industries are getting more and more crowded. I think you have to trust that, maybe it isn't always going to be the most popular thing with investors or, other groups, or even sometimes you got to put your head down and keep experimenting. Kind of that lesson that I'm talking about where like, yeah, sometimes building the thing that people want isn't the thing that they need, and you have to think about what they need. And I do believe that will, come out in the wash eventually. And then I think in terms of what not to do, I would say it kind of goes to quality again, and then also a little bit like sometimes people ask me things about, "Oh, I got this app idea," or whatever, and I'm just like, "Oh, that's a nice app that I think you'll be building for Microsoft." Like, "What?" And I was like, "Well, nobody really knows how much this costs yet. So you could be building that. You could be building your GPT wrappers. They could be very nice, and you could have, nice margins at the beginning, but the true cost of that might mean long term that you're actually not making any money. You're basically like a pass through between users and Microsoft. And we know Microsoft is very good at monetizing. So I would say, um, think about that as you're building something, and maybe use local models as a backup even if GPT is like outperforming. Like, make sure you're not building something, even if it's a lot faster and you're saving costs or whatever, that isn't defensible, because you could regret that later.
Makes sense. Great. What advice will you give yourself? I mean, will you give your earlier self before launching Prospero?
Before launching Prospero, I would say more contact. Like, I'm saying this thing about building for users. And I think just like more iterations with focus groups, things like that. I think we would have moved faster if we didn't like, we had this like, here's our version, here's our next version. Like, we had basically 4 versions. And I would say in between those, we were a little too siloed. Like, I would say the best thing you can do is like kind of what you see with these LLMs, where it's like 4.1, 4.2. Like, I would be thinking about that for your product. And even if you're not releasing them all, constant contact on these like little iterations, even if you're just throwing up like wireframes or designs or whatever, and you're getting the feedback, I think we would have gone a lot faster and gotten to answers, probably a lot of the same answers, but a lot faster if we were getting that constant feedback as opposed to these like big version pushes.
I love it. Great. George, thank you for joining. It was just great, strong insight into your journey, the evolution of AI in finance, and the work you are building at Prospero. Thank you very much for your time.
Thank you for having me.
And where can people find you or see the work you're doing?
Yeah, so Prospero.ai, our website, you can get our app there. You can subscribe to our newsletter. It teaches people how to use the app. I also recommend the Discord. We answer every question. There's other people in the community that have gone on the learning journey that can kind of help you. And with that, I would say those are the 3 best ways. If you have to pick one, I'd say pick the newsletter, because the newsletter kind of gives you the most help, and it tells you at any given time what we think is the best portfolio. But yeah, as I also said, if you want to just learn more, get some free trials from me on the paid products, you can just email me, George@Prospero.ai.
Fantastic. Thank you, George. Thank you so much.
Thank you.
Okay, and that's it for today's episode of AI Interconnect. And if you enjoy it, share it with someone who is building the future, or better yet, someone who should be. And until next time, stay curious, stay creative, and keep building. Thank you. See you very